All right. Today should be a very quick update because we went into a detailed analysis of SPY last night. So if you didn't see last night's episode, be sure to check that out because I went into very detailed analysis of both the bearish and the bullish scenarios from here. So today's SPY was up 0.58% and we did continue the bounce from yesterday's gap fill, which was that gap right around 423. And we're stuck in this very critical range of 420 to 430. And tomorrow we do have PCE data, so that's going to be a catalyst to see if we can gap up and break through that resistance. And if we do, we'll be looking for a trip to 436 and then that gap fill at 438. If we can't gap up over 430, there's always going to be the chance we get rejected from that resistance. And if we do get rejected from 430, there's a very good chance we go to 420. Now, in order to stay bullish on the weekly chart, we will need to hold above 420. So if we break down and start closing below 420, I am going to say the bull market is over, which means we could be heading back into a bear market or a continuation of this current bear trend. That could still be a deeper correction, but there's a good chance if we can't hold 420, we're going into something much deeper than a correction. So just keep that in mind because 420 is a very critical risk level for you longer term swing traders. So 430 is a critical resistance. Above 430, we have plenty more upside until we get to the next resistance. And a rejection here likely takes us to 420, so it should be a very straightforward trading day. On the NASDAQ 100 triple Qs, we were up 0.84% today, and the triple Qs are bouncing from this critical support at 355. And again, if we break that support, we're likely going to 347. But from here, there's a good chance we will bounce up towards that gap fill above 364. Keep in mind, even if we fill that gap, it's still possible to get a rejection and then still go to 347. So even in the event we bounce up there, don't be surprised if we still finish out this correction at 347 before we continue into the bull trend. And then if we break 347, we have the possibility to go into a deeper correction and fill the gap at 333. So that gap fill in that resistance zone in the mid 360s is going to be very critical. And if we clear through all of that resistance and break 370, then we likely finish out this correction and we're going back in the bull trend. On the Dow Jones, we were up 0.35% today, and the Dow Jones is getting that dead cat bounce from this critical support zone right around 336. And from 336, we could bounce all the way back up to 341 or the gap fill at 344. Again, any bounce could still be a lower high because we do have the bear trend with the moving averages all stacked to the bear trend direction. So in order to get more bullish, we would need to clear and start breaking back over 345. On the Russell 2000 IWM ETF, we were up 0.9% today, and the small caps are bouncing from this very critical support at 174 because if we break that critical support, it's basically a straight shot lower towards 170, and we do have a gap to fill just above 171. So below 174, that's another breakdown for another flush to the bottom of the range. And I do expect the bottom of the range to hold that support at 170 in the event we do go that low. To the upside, we need to break this resistance right around 179, and we do have a gap to fill just below 180. So if you're looking for a resistance to short from, you're basically getting in that zone now. And if we break through that gap fill, you have the negatively sloping 20 daily moving average. In order to get bullish, we need to break out of this downtrend and break through this resistance trend line, which is up there right around 183 to 185. On the ARKK ETF, we're up 1.14% today, and we're getting the bounce off of this support trend line right around 38. But again, we are still bearish below 44.5, which means everything is likely going to be lower highs and lower lows until we fill the gap below 36. And the next gap to the upside is just above 40.7. On the VIX, we were down 4.78% today, and the VIX is crushing back down below 18. And this is what the bulls need to see because the VIX above 18 is telling us we're likely going back into a bear trend. VIX below 18 is looking a lot more bullish, especially if the bulls can crush it down tomorrow closer to 15. So watch that very critical line in the sand on the VIX at 18, and above it you're looking for more bearish probabilities, and below it you're looking for more bullish probabilities. On Bitcoin, we're currently up about 2.6%, and Bitcoin is very close to validating a bull trend because we have the higher low from 25,000 where we bounced from 26,000, and then if we can get the higher high breakout above 27,000, we officially have a bull trend building. This is also happening on high volume, so do not ignore it. And if Bitcoin goes back into a bull trend, we can likely say the bottom is in at critical support at 25,000, and that's going to be a risk on indicator, which is also going to help us have more risk on sentiment in the market as well. On Tesla stock, we're up 2.44% today, and Tesla is doing everything in its power to hold this support zone right around 244. And if we can't hold this support zone, we're likely going to 230 and then the gap fill below 218. In order to get bullish, we need to bounce from here and break through all of this resistance at 255 and the gap fill at 262, and then validate the higher low by breaking through that resistance up there between 274 to 275, and then we officially have the bull breakout, and this is going to likely take us to 296 to 300. On Apple stock, we were up 0.15% today, and Apple is very close to closing the gap at 167, and we did hit the double top price target, which was the breakdown below 174 today at the price target at 168. So 167 and 168 is going to be a possible bottom in Apple stock, meaning we could get a very impulsive bounce that could take us all the way back up above 181. And then if we break through that resistance, we could go all the way back to 190. So manage your risk at the breakdown, which is 174. And if we reject from 174, we're still looking for lower highs that are likely taking us down to the gap fill at 167. So jumping back over to the S&P 500, this is a very simple chart to trade as long as you have no bias and you're getting a lot more bullish once we get above 430, but you're cautious and risk off below 430. Below 430, we can go see 420, and then 420 is a great risk-reward ratio for you long-term swing traders. So go make your trade plan, know both scenarios, and as long as you're prepared for both scenarios and you have no bias, you're going to do just fine. As soon as you start having a bias and start forcing your will upon the market is where you're going to start making large losses and large mistakes. So have no bias and let the price action do all the talking. We are absolutely crushing this market on the Stocks Channel Discord server and Bank Trade Alerts, and you can still get the Bank Labor Day sale before the month ends. I'll put all those details in the description below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.